Hi, and welcome to our quarterly investment update, where I'm joined again by Mash, and we're going to look back over the last quarter and see what's been going on in markets. So, Mash, it's been quite an eventful quarter again in world events. So, what impact has that had on markets?
Yeah, so generally markets have actually been really strong across the board. EM, Asia, US, UK, and even Europe, which is lagged behind a little bit, have all finished the quarter in really strong positive territory. So we've been really pleased with that. And that has also translated into portfolio performance as well. So really pleased and reassured to see that portfolio performance has been strong, and being able to benefit really from this nice environment that we're in after a little while. So yeah, generally pretty good across the board. Nice news going there. And how have clients been feeling?
Yeah, our clients are very happy at the moment. Generally, is the case when the investments are going up. I think people are feeling that whilst there's terrible things that they're seeing on the news, when it actually comes to their investments, it's a lot more stable at the moment. Everything's sort of heading in the right direction. So generally, clients have been very happy. We did talk last quarter about geopolitics. You touched on that, and we just mentioned about world events. What is happening there?
Yeah, so definitely something that's been really popular on the news for the past, well, not just quarter, but for the past couple of years, really. Finally, we have actually seen a ceasefire being agreed out in the Middle East, which is really good to see. The people affected there clearly needed it as well. And then we've also seen some other news going around, sort of the US seeing a government shutdown. Both those events, whilst being quite headline grabbing, actually the impact on portfolios is quite minimal. So whilst it's positive news in one end, seeing peace in the Middle East, actually the effect that's had on portfolios and markets has been quite small. So good to see. And actually, as long as nothing bad is happening to portfolios, all good there too. A bit closer to home, we've got the budget coming up, obviously, and we wait to see what happens there. The general impact, in terms of what we're expecting, will be quite small. Our portfolios and markets that look at everything from a global perspective. So actually, the impact of the budget is more likely to affect us more as sort of UK consumers and residents, rather than what global portfolios are going to see.
In the news, there's headlines that are always grabbing us about gold, about crypto. Have we got any views on that at the moment?
Yeah, yeah, good question. I think I'll address them separately. So gold is something that's been used for generations. It's been a safe haven asset. It's where people go to in times of uncertainty, and it's sort of always been there. Gold is also finite. You can't log onto your computer and create new gold. So it's a real asset, and it's been used widely in portfolios. We are overweight slightly in gold in our core portfolios, and I think that's great. I'm a big fan of gold as well. I like its nature, that it's real, that it's finite, it's there, and I think will always be there and used as a safe haven. So positive on gold. Slightly, I think it still needs to be used with caution, absolutely, which is why we're working with high quality managers in that space. But generally positive. Cryptocurrency, on the other hand, we've seen the FCA announce recently that they're allowing the use of crypto in retail accounts, and I think that presents quite a risk, actually. Cryptocurrency is extremely volatile, and it's a purely speculative asset. And I'm sure some people are out there investing in it and making money from it, sure. But in terms of playing a role in a well-managed, diversified portfolio, it's definitely not something that we would be doing, at least for the time being. Who knows? Maybe sometime far in the future we might, but for the time being, we don't think it's a feasible investment vehicle, really.
Okay, thank you, Mash. So looking ahead really to the next quarter and beyond, what are we thinking?
Yeah, so looking ahead, the main focus really is inflation, really. And I mentioned this several times over the past year or so. And what's happened with inflation is we've gone from those really high figures that we saw a couple of years ago, and we're now at that sort of really that last stage, which is arguably the most important stage. It's going from raised inflation to normal. And this is where things get a bit difficult. It's where we're now seeing inflation be a bit more sticky, which is what it's often described as. And this is going to be where central banks and investment managers as well are going to have to sort of earn their money, is working out how to tackle the environment that we're in. You might have seen on headlines, some mortgage rates are actually going up in some cases. And what we're seeing there is central banks actually are having to really think hard about their positioning with interest rates. If they are to cut interest rates too fast, then that risks inflation going back up. The Federal Reserve in America is always under criticism from Trump for not doing it fast enough, but actually central banks really need to make sure that they cut rates at an appropriate level and that they don't risk inflation going back up. So in our portfolios, everything else is very much the same, globally diversified, high quality active management, and there's sort of that added layer of protection in there just in case inflation does creep back up. Our managers really want to make sure that the portfolios aren't vulnerable to that potential risk, and just adding that extra sort of layer of security in for our clients.
Thanks, Mash. So in summary, the markets are up. We're cautiously optimistic about the future, and our key message is the same: having a well-diversified portfolio and keeping a long-term view of your investments. And we'll see you again next quarter. Thanks for listening.